Now this video is partly inspired by my son because over the weekend we were at Redhill and he absolutely loved this playground. Let me pull up this picture for you to see. It's a fantastic playground. You know, he had such an absolutely good time over there and he was asking, Daddy, can we actually stay here or not? And my answer of course is no, because we already have a house. But that actually, sparked a discussion, within myself. Where would I buy my first property, if I were to turn back time? Redhill definitely will be up there on that list because I'm familiar with Redhill, and Redhill in terms of location is fantastic. It's just a couple of MRT stops away from Raffles Place. And as always, we've always heard before, location. When it comes to property, it's always about location. When you have good location, your value is preserved. When you have good location, you can find tenants very easily. So it's always about location, and Redhill ranks very highly in that. And this video, I want to also address another concern because you've been seeing a lot of advertisements slamming HDB's leasehold, reflecting BALA's curve. And let me pull this out for you to see. A lot of suggestions, mention that HDB is not really an asset, but I have a different viewpoint. Again, BALA curve is with respect to freehold value. It does not mean that in a short span of time, HDB prices will definitely go down. It's just it decays against a freehold value, which makes sense. But again, I've also boxed up in green, as you can see over there. Capital gain for this particular block of HDB is actually gained 1.11% over the last 8 years. So it does not mean that as the HDB becomes older, it's definitely going to fall in value. It depends on market trends also. So I've also circled in yellow over there. What you can see is 4.36% to 4.83% in terms of rental yield. And that's a fantastic rental yield that only HDB can give versus a private property or even a freehold property. So HDB does have very good rental yield, and there's a lot of reasons to buy a HDB in my opinion. Today I will be sharing with you some reasons for that. In this video, I'll also be sharing with you what to take note, especially if you're buying a first property, what to look out for, what to research on. And towards the end of the video, I'll be sharing with you a bonus tip when it comes to rental property. So with that, let me roll in the intro video. Hi guys, welcome back. Now I'm going to break down this tutorial on how you can actually buy your first property in 3 quick steps. So if this helps you, pull out a pen, jot down the important points that I'm going to suggest to you. I'm going to run through very quickly. The first thing that you should know and you should take note of is actually your affordability. Go online, go and pick up on some calculators, and the one which I'm using right now is by HProp, and they're pretty simple to use. So far, I found theirs to be very intuitive. So how it actually looks like when it comes to planning affordability is something like this. Let me pull this up for you to see. As you can see in this assumption, someone else as of age 35, because buying a HDB as a single, you can only buy after the age of 35. If you're buying as a married couple, you can buy at any age. If you want to buy a private property, yeah, you can buy at any age also. But in this example, someone age of 35 buying a HDB. And what you need to input into a typical calculator is your income, your fixed income, your variable income, which in this case I've simulated someone having 100,000 annual income. And actually do financial planning. This is actually an income range that is very common. I've seen before most that are in the 30s around this 100,000 or even above this number. So it's actually very realistic. Then next part is how much cash and how much CPF you actually have. If you haven't done your sums, go and do it because it's very important. You need to know how much you have to plan on budgets. And again, inputting a number of 250,000, as you can see over there, is very realistic. At this age, everyone will have worked, at least a good 8-10 years, something like that. Building up CPF and cash is actually very simple. So 250,000 in terms of capital, as well as annual income. How much is being eligible is 736,663. Now this number might of course vary based on what you have in terms of capital as well as your actual income, but really the whole objective of this is to know your budgets, because when you know your budgets, you can know what you want to target, correct? So again, let me pull up this 77A Redhill. I don't actually market that, I'm not a property agent, but this is our stories example, and these flats in this block, these foreign flats are actually going at around this range, 750,000. So as you can see, it's very possible for someone to actually purchase this, even as a single at age of 35. So knowing your budgets, you actually know, the next part you should know is actually your grants. There are a few grants given by government buying HDB. The first is actually on enhanced housing grant. Enhanced housing grant is going based on your income. So if you're drawing a good enough income, there may not be so much grants in that sense. Conversely, if your income is lower, you do have quite a bit in terms of enhanced housing grant, but the amount of loan you can qualify is also lower. But the other grant that everybody can qualify is actually the proximity housing grant. This one, as I pull out for you to see, applies as long as you stay near your parent. So in my instance, my parents are in the Tiong Bahru area, so I wouldn't be looking for something in Choa Chu Kang or Tampines or Woodlands. Buying something at Redhill qualifies for the enhanced housing grant. So again, depends on where you live. Find somewhere that you can qualify this grant with, because it's free money, it's free grants. For families, it's 30,000 as highlighted. For singles, it's 15,000. So definitely try to think in terms of this line, how you can maximize your capital as well as what fits you. So with that, let's move on to the second step, which is to think of what is actually good value. Now, good value can be in a few variations. Good value can be because the owner is selling it slightly cheaper because the place is very rundown and you're willing to renovate it totally. So again, that could be good value. There's less competition trying to bid for that property. And the other part of thinking of good value is actually in this, back to this BALA curve again. In my opinion, at this current moment, flats that are 10 to 40 years old seem to be penalized quite a bit because of this BALA curve. Leasehold properties in this segment, in my opinion, could be very good value. And they are of course not at the tail end of their lease itself. When I analyze HDBs that just turned MOP 5 years only, I realize they are selling at a premium because they are fresh, they are new. That's why I feel that segment seems to be expensive. This 10 to 40 years old HDB seems to be good value, so that's something for you to consider. And using this example, this 77A Redhill, this was actually completed in 2004, so do be familiar with what you're trying to target. This is a 16-year-old property in this sweet spot, in my opinion. So I do feel this is good value in a lot of ways. Staying in a flat 16 years old, buying it right now, in the next 15 years, you can live in it, and you can still sell it off with quite a lot of lease remaining. You can have a lot of flexibility, in my opinion. So this is why I feel a property in this age is actually of good value. So now let's move on to a third step, which is to negotiate, and to negotiate it well. Now that depends on each person's personality. I'm in sales, so negotiating is really part of my work in a lot of ways. So I'm familiar with it. I actually bought my properties negotiating myself. But just in case you're not too comfortable with it, you're not too familiar, you want to make sure things are going right, then engage a property agent to help you negotiate. And it usually comes with a few parts. The first thing to take note of when it comes to negotiating is you need to have good enough options. Because the first thing about negotiating is you need to be willing to walk away, correct? So if you're fixated on one unit, you can't negotiate it well. You can't walk away from the deal. Then it's very difficult to get a good, a value from it. So the suggestion that I have is you need to have a broader options, broader pool of potential units they are targeting. Judging from the Redhill, not just the surrounding blocks, but also in Tiong Bahru, in Commonwealth. That's how I'll approach the game itself. So you need to have a lot of options. Give your property agent more options that you are willing to negotiate for. Then again, you can secure a good value for the flat. So it ties in hand in hand. And the next part is to do thorough research. Let me pull this up for you to see. Details of past transactions right now are very transparent. Any property guru website or 99.co website can show you transaction history. So once you know your numbers, you definitely know what price is worth it, what price you're willing to walk away, and what price you're willing to close straight away. So again, doing research, knowing your numbers really helps when it comes to this segment of understanding the game. Now, if you have benefited, smash the like button so that more people can see valuable content like this. And again, inviting you to press on subscribe so that you join our family, become more financially savvy. Now, I've actually friends who bought a new HDB and then they've actually dedicated out rooms to be rented out to bring in passive income. I have a friend renting out 2 rooms actually to bring in 600 each. And room rental can actually be done within the MOP period. So again, renting out the whole unit, yes, you need to forfeit MOP, but if you're renting out room itself and you're staying there, by all means, that can be very quick passive income that you can consider for yourself. So how to do room rental? Nowadays, there are so many portals and there are so many Facebook groups. So one example is this. You can actually just go to a Facebook group and post. It's quite easy to interview potential tenants. So it's not difficult at all. So at least today, if you haven't heard of it, now it opens your mind that you can actually bring in passive income from room rental itself. Now at this point, there's something that I haven't addressed, which is buying private property better than buying a HDB or not? So I have a few quick points, to quickly help you understand the situation. The first thing, of course, to address is buying a property, you can qualify for a bigger loan. It is true, it is factual. Simply because there's this ratio in HDB affordability, that is the MSR ratio, mortgage servicing ratio. So using the tutorial example that we went through, someone earning 250,000 with an annual income of 100,000, what is the difference in terms of the quantum that can be qualified? Let me pull this up for you to see. You realize that the HDB is $736,663, but buying a private property, the amount that can be qualified is more than 900,000, simply because there's no MSR ratio. And if you have followed this channel for a long while, you do know that I'm big in terms of making sure mortgage is affordable, because there are times that can be bad or situations can change down the years. So I always prioritize affordability ahead of everything. Being able to qualify for a bigger loan is not an advantage in my opinion. So if you'd like to understand more on private property trends, I've actually a previous video done up fully on it that try to give you an alternative point of view, which is there really an opportunity in private residential market? And that video is only the member section. So if you're keen for that video, look to subscribe for that, because within that there's private only videos as well as some deals that I can't make into a public domain. So that actually has a fee of $2 only, but I'm giving you way more value than that. I'm sure you benefit a lot with that. But the gist of it, let me give you a hint of what is in that video. That video actually addresses, for example, the pipeline supply when it comes to private property. And that supply, as I've shown in this chart over here, this snapshot from URA, is not abating anytime soon. There is huge oversupply. It's going to take years and years for it to decline. So again, if you are looking to understand me better, look to subscribe to that. And with that, I've also still a free content that I'd like to invite you also. And that free content is actually this discussion whether CPF savings are better in the property itself. I've looked through historical numbers, I've looked through in terms of calculating compounded annual growth rates, and that video actually gives you some different point of view also that can help you further understand whether it's time for you to buy your first property. With that, I'll sign off, looking to invite you to that or join the member section, and I'll see you in both of these videos. With that, I'll see you. Take care and goodbye.